It delivered record revenue. It delivered on the high end of earnings, actually above. They at $1 a share. They generated tons of cash flow this quarter. They were up 43% at $5.2 billion and returned almost $3 billion to shareholders. So another very well-run company. Pat, what I've been watching for with Cisco is, look, this is one of those companies that's on that sort of, it's on that tipping point between old, big iron, high value capital expense and getting to more recurring revenue. You and I have had sit downs. We've talked to Chuck Robbins. We've had talks with their CFO, Scott Herron. And as we've gone through these conversations, what we've found is that this is a company that's really aggressively trying to pivot perception. It used to be about selling switches and maintenance contracts. That was the business. Now it's more software, it's more recurring revenue, it's observability, it's collaboration, it's security. So it's in a lot of businesses. And of course, it's in networking. And networking right now is going to be red hot. You're seeing all the impetus on Ethernet networking for AI. And Cisco should have a story to tell here. They've partnered closely with a number of the semiconductor companies we've talked about. And, obviously they're building more and more high capacity switching and networking capabilities to handle the traffic of the future. What do they always call it, Pat? Internet of the future? That was the Cisco thing.
Yeah. That is actually a breakout in their P&L. Internet for the future. No joke.
And it's up 5%. But where did their growth come from, Pat? Well, their growth this quarter came from secure, agile networks, 30%. Big growth in that category. But the other thing that I've been tracking close, and I think you have too, has been software growth, subscription growth. 18% software growth, 17% software subscription growth, 11% subscription revenue growth. And their RPO is up too. Not bigly, but their RPO was up in the quarter. We're seeing revenue growth globally across the world. So they saw growth in all their major markets this quarter on a quarter over quarter and a year over year basis. The one area that's been kind of just hard to figure out is how they're going to manage through the collaboration consolidation with remote work. They've got WebEx. That business, Pat, shrunk 13%. That was probably the one slightly black mark, given the fact that we're going back to this hybrid work, but they've got the hardware, they've got the software, they've got the platform. They just haven't been able to seemingly capitalize on it as much as in other areas, Pat. But overall, I'm focused on the subscription revenue and I'm focused on the recurring revenue for this business. They seem to be able to make those pivots. The only other thing I'd say, Pat, is the order book was down. And that was the other thing that kind of, I think it was down about 20%, a little over 20%. And that's another area that, of course, people are going to be watching as the RPO was up, but the order book was down. Does that mean that we have slower quarters ahead, Pat? And, I think the guide was pretty conservative, but they did raise it. So, despite the order book being down, I think the company still feels it's got strong RPO, enough backlog, and enough success in the areas that it's competing to win long term. So that's my quick take on Cisco. I had to take a little jog because it was like, 2 weeks ago now, down memory lane. But it's good that I'm young and the brain still triggers on a Friday morning.
That's right. You're not stuck like me with the crystallized knowledge. So
cobwebs and
something like that. So no, listen, I mean, beat, raise, right? And the company is being rewarded, in the stock market. And one thing I really love that Chuck does is he has a very strategic point of view, right? I mean, how does he start it off? I mean, third paragraph, right? Or, third paragraph on the call, he goes through long-term growth. And I freaking love that, because in the end, it is about long-term growth. And if you're focused on that as a company, you may sometimes get into hot water with investors who are more short-term focused, but your customers love you for it. Chuck talked about, again, the continuing drumbeat of subscriptions and recurring revenue. $32 billion in RPOs, and RPOs are shorthand for services and anything anything as a service that you sell. Also talked about security as an opportunity. And Dan, you and I have talked many times that the security market has really shifted from a best of breed at all costs to simplifying it. And not that those best of breed offerings aren't best in breed, but if you're an enterprise and you're stitching together 10 of these so-called best in breed pieces, what you find is you're 2 or 3 revs behind and you were no more secure. And the chore of stitching it all together can sometimes make you insecure. Cisco Security Cloud is interesting. I call it fabrics. They call it a cloud. Essentially, looking at the hybrid multi-cloud, and whether it's at AWS, on-prem with Cisco, having a common thread for security, common fabric for security and networking, I just freaking love. And then finally, generative AI and the cloud, right? We talked about chip providers like Cisco and Marvell and Broadcom taking advantage and having to move the data, moving it between clusters, moving it between racks, moving it between data centers. This is, I mean, everything goes through that Cisco switch at the end of the day. So more data going in, companies are going to have to up their capabilities, and I think Cisco wins. I'm looking forward to a drill down at Cisco Live. I'm going to be there Monday, Tuesday, and Wednesday. Looking forward to it.